All right. Anybody there? Guess we'll wait a few minutes to see if anyone else shows up for the call, and we'll get started. If there's anybody there, let me know who's in the chat. Tell me maybe your name, where you're at, something like that. Last week I did a really bad job on noticing that people were typing to me in the chat because you have to hit this little button because I've got the live stream playing like on my phone and I'm watching the chat from there because I don't have multiple screens here. So last week I didn't hit the little button where you can pick a live chat or top chat. So I thought no one was talking to me the whole time, and then at the end of the stream I noticed that people had questions and had picked pairs to look at and all kinds of stuff. So that was completely my mess up. I know it's Valentine's Day, so this could be a pretty lonely stream. I am currently out of the country and I am here alone, so I'm lonely man on Valentine's Day. So just me and the charts. So hopefully some of y'all will come and keep me company, but if not, I guess I'll just do kind of like a market recap or something and just go from there. But if there is anybody in the chat, let me know who's here. You can go ahead and start entering what charts you want me to look at, stock, currencies, whatever. If you start putting in the chat, and then I'll just go in order and we'll break them down. It'd be great if they're charts I've never seen before, because we can really get into it when I don't already know about the charts. That's always pretty cool. So just tell me, just give me the symbol of which, if it's a stock or a currency pair or whatever you want to look at. Or if you just have a general question about the market, we don't have very many people in these streams yet, so just the floor is pretty open. I think I have enough time to answer pretty much anything that anybody has to ask. So just whatever you want to talk about, just put it in the chat and we'll take it in order. Anthony from Alabama, good to see you, man. I appreciate you joining me on the stream. Alabama, I don't know what happened to your Crimson Tide in that last that championship game, but we don't really have to talk about it, but it's a little concerning. I'm just joking with you. Anthony, if you have any charts you want me to pull up, let me know. Just put the symbol in the chat, and I'll get to it straight away. And while we wait to see if anyone puts anything in the chat and maybe more people to show up for the stream, let's just talk about the market in general real quick. This market's kind of getting on my nerves a little bit because it's moving really, really slow. Let's see. This is a monthly chart. All right, let's go back to my charts. Let me pull up SPY. Okay, I see all of your symbols, so I'm gonna get those in order in just a second. So looking at SPY, let me get off this. So my feelings are, I've been saying the same thing for weeks, right? So we're in this resistance area. But the thing about resistance areas, and this works on basically on all time frames, when you're buying or selling a retracement, whether it be at support or resistance, a lot of the time you're going to get you can get pushes of price above the resistance area, and I still count that as a reversal. But what happens is the further up you go and the further the retracement, the more likely you are that you're not going to get the reversal or the continuation of the trend. So the further this thing goes up past, because this is the 60 to 80% retracement of the overall long down move, which was a 20% drop. And when you start looking at charts, Tom DeMark was on Fox News this morning, or maybe it was yesterday, for DeMark Analytics. And you guys know I like Tom DeMark. And they were calling that this is a turning point in the market. And so if it's going to turn, it shouldn't keep going too much further up. But I mean, it's not uncommon that it could go all the way up to maybe 280 or 282 and test that level before the turn happens. But the further up it goes, the less likely it is that it's going to continue down, which is good for the market, which, and I've got support down there. So we're looking at it. And there'll be some buying opportunities down there. There's definitely going to be a lot of bulls down here to wait. But right now we're just waiting. This is a low probability area to buy, and we're not getting any type of selling follow through. So it's just boring. So that's where we're at on that. All right, so let's get to the charts. All right, Tesla. I think we talked about Tesla last week, and where we were at on Tesla. I tried to buy Tesla here, or sell Tesla, I'm sorry, here, and I didn't get filled by 3 cents. But my opinion on Tesla is this is monthly support. This is weekly support. The blue lines are weekly support. So what I said last week in analyzing this chart, because Anthony, I don't know if it was you, but someone asked me, would I buy Tesla right now? And my response was, because at the time we were right here. This red candle was the last candle on the day that we did the video. And my opinion was I wouldn't buy it at support. Not saying that it's a overall buy, but I wouldn't buy it at this resistance area because this is a low probability area. So if you would have bought there, you immediately feel the downside pain. A better buy would be somewhere closer down here. Now, this chart is bearish on the monthly chart and it's bearish on the weekly chart. And typically that means that you should have more bearish pressure going down. But when you step out to the weekly chart and you look at where it's bouncing off of, this is a retrace. This thing has been in a range for months, and it's retraced down kind of to the retracement or the pivot area for the range, and it's turned. So you could get some upward pressure from there, but I think the safest player on the sell side, and I'd look for more of a test of the bottom before I would buy. But I don't know long. It depends on your time horizon too, because this range is pretty set. I mean, what is this? This is June of 2017 is basically the high, and we haven't been past that. So we're coming up on a year and a half, or we're past a year and a half, a year and 8 months that it hasn't broken out of this area on the high side, and it's put in this low down here that's been in place since April of last year. So you're just in a range. It's going sideways. Fundamentals typically drive price direction in the big picture. So technicals are typically good for short-term trades and setups and entries and exits and things like that, but not the best indicators for what the long-term direction of the market's going to be, because that's going to depend a lot on Tesla, what Elon Musk and the plan. Right now they're having problems getting the car under 35,000. And their tax credit got cut, so they're having a hard time getting the price of the car down to hit mass market appeal. And the competition is coming. The other car manufacturers are spending billions of dollars to get electric cars out on the market to create competition, and those guys are intrinsically more ingrained in the automobile industry. Tesla's got an edge in them creating their own batteries. So there's a lot of fundamental stuff at play. So I couldn't tell you where I think it's going to go long term. But the way I trade, I don't really care where it goes long term. So as far as trading it, I'd be looking for some sell setups. And for me personally, I had a sell setup. I tried to enter I didn't get filled. Right here on this blue candle, I had an entry at 83, if I remember. Yeah, it was like 318.83, I think. And the high of the candle was 60. So I missed it by 13 cents, and it didn't get me in. And it's already been to where my exit would have been. So we'll talk about. I have 10 different trading strategies. That's one of them. So I was looking to sell it. I'd probably look to sell it. I'd look for options to sell it. But now you're going to retrace back to this bottom, and you're going to find some support down here, especially if the market turns. So I don't know. You'd have to play it by ear and see what kind of reaction you get when you're down here. So I think the sell opportunity was here. Sell opportunity was here. You missed both of those. I wouldn't try and sell on a continuation. I look for the buy if you get support down here to trade it up short term. If not, maybe wait till it breaks the low and then wait for a pullback and then try and jump in there. All right, that's my thoughts on Tesla. Nvidia, another one. I think I did the Nvidia trade live. I hope that answered your question. As far as Nvidia, if you look at my little blue line, my little blue arrows here, I bought Nvidia here at 131 something. I can't remember what it was, and I didn't bring my trading journal in here with me, but this has a upward polarity. Sorry about that. And as I said last week, this is a head and shoulders pattern forming here. All right, so you've got your shoulder here, you have your head here, and you have another shoulder there, and so here's your neckline. So if we get a price break above here and it stops here, I would think that the upside potential is probably up to the monthly resistance. And apparently, it looks like this stock is going to trade contrary to the polarity of the market to SPY, because it was going. I was getting upward trend line breaks. Well, not really. It's a wait and see. I don't like. I'm a swing trader, so you have to take my opinion with a grain of salt. I don't really have a really good trend following, or I should say breakout or momentum play type strategy. So I like to buy and sell around decision zones on the chart. So I kind of stay away from this middle of the market stuff, because this is kind of one of those things where you don't really know which polarity is pushing the market, and you can stick with the one that got it up. So like if it gets to here, obviously it was going up, but it's just really tricky in the middle of the zone, because where do you pick your resistance levels at? Price is always bouncing off support resistance at all times on every time frame, 1 minute time frame, 5 minute time frame. And it's probably not enough time to get into it on this video for fractals, but fractals are basically breaking down sections of a larger time frame. So 1 hour chart is a fractal of a daily chart, which is a fractal of a weekly chart, which is a fractal of a monthly chart, which is a fractal of the general overall direction. So the lower the time frame that you go down to, the more information you need to properly trade it. It's very, very hard to orientate yourself in day trade. 1% of day traders make money after fees, like out there. 1%. It's really, really hard to do. So the people that are playing in this zone right here are day traders mostly. You have some fundamentalists that are in that area, but it's mostly day traders. All right. So for this market, for this stock, polarity on a weekly level is up. Monthly resistance is up here. So you've got a lot of room to run. And if we look at a weekly chart, you see what we're looking at. We had a really, really gigantic move down. I mean, what was this? This is from October all the way to December, straight down. So, markets retrace. Typically, 50% is a regular retracement. 60 to 80% is normally where the turn happens. So 60 to 80% is represented by these lines here. So if you're going to retrace back to here, this is going to take a while to get back up here. So you've got some room. So I'm a buyer of Nvidia right now. Let me see if it sets up for a new position for me. I'm going to quickly analyze this without pulling up. Yeah, so I'd personally, if, this over the next week, if I got a retest back down here, I'd probably buy it again. Being honest, I got in here, I got out here, and my second leg would be to buy it if it came back this way. I'm not going to tell you exactly where, because I don't want to lead you and give you financial advice and get myself in trouble. But yeah, I'd probably be a buyer. Nvidia's direction is up for the short term, in my opinion. Let's see. LRY. All right, so I don't have that one on my. All right, so we get to do a fresh chart here. So whenever you pull up a chart that you don't know anything about, you always start with the largest time frame because you want to orientate yourself and see what's happening. All right, price started down here, obviously $20-something, spiked to $300, and now we've come down. All right, so polarity wise, the market's really been going down, but it was a giant up move. So if you were to look at this, I mean, you could look at it like this. Price made its one giant move. It's retraced far enough back. Now, there's not enough history on the stock to really know, I don't follow the fundamentals. I'm not aware of the company. It's pharmaceuticals, obviously, but I don't know what their product is and what these types of stocks can sometimes just fizzle out and go away when they're brand new. There's no history. Let's see what the volume is. So it trades 2 million a day on average. That's pretty good for a $76 stock. It's a big boy stock. All right, so I don't follow it. Maybe I will. So let's go to the weekly chart and see what it looks like on a weekly level. Okay, so the price is squeezing into a small range. If you were to put time to mark lines on it, it would look something similar to this, which is a standard kind of like a triangle formation that you got going here. And actually the most up-to-date version of it would be like this. Typically when price squeezes into a small compressed area like that, it's preparing itself for a really large move. You have retraced right past, basically around 80% of the move, which is typically a buy area. But like I just said about the S&P, typically when you get a retracement so deep, I love to buy deep retracements, but when you get a retracement so deep, a lot of the times that means that you're going to get a failure up here and not make a new high. So it's kind of like if price is going up, it looks something like this. So if price is coming up, right, and it doesn't retrace, let's say it's coming down and it doesn't retrace all the way back and it only comes, 30 to 40%, that gives it more room to go up and make a new high. Because what you'll learn is if you spend a lot of time studying charts and really just like get a chart out and just go through the chart, what you'll find is there's a structure to price. Like it moves. Let's say it only does 100-point moves. I'm just going to make some numbers up. But if it goes up 100 points and then it comes down 60 points and then goes up another 100 points, you just gain 40 points. But what you'll find is the size of the moves are very similar. So if price goes all the way down to 80%, it's only going to come back 100, and it's only going to give you a 20% profit. If it comes all the way, but if it goes to 60%, you'll get a 40% gain. So the size of the move, there's a lot of structure to price, way more structure than you ever think existed if you go through the charts and really look at it. And it's really helpful on longer time frames. So I said all that to say price is squeezing into a small compressed consolidation type of a thing. Normally that's an explosive move out of that. You're at major support area if it's going to turn, because the only thing that you can do from here is go to zero because this thing, is this is its inception right here last year in July. So if I had to bet on it, I think it's going to explode to the upside. So I mean, I'd be careful with that. I don't know, have good entry rules and strong money management, but this play I would think would be to the upside. Now, as of right now, the last the last polarity change on this chart was to the upside, because we had a DeMarc line here, and you see this area right here, it broke through, changed this downward sloping trend that we had here, because you could actually extend this out, and look, that's how it was. So it's gone to up, and it put in a low right here, and price hasn't gone over that yet. But there's just no follow. My magnet's gone. There's just been no follow through from the market, right? So you're at the support for this move right here. This is a weekly chart. So if we look at that on a daily level, and then you can see how that's playing out. And then on a daily level, polarity, you had a polarity change here, right, in this area right here, and you're at the 61% retracement right now for that move. And I can do that with my eyeballs. And there you go, right? So yeah, it's in a buy zone. I mean, I'm not recommending that you buy it, but it's in a buy zone. And the move up could be substantial from here if you're looking at the chart. I mean, if you're ever going to buy a stock and hold it, it's on a deep retracement like that. But just keep in mind that because it's retraced so far, you're going to meet some resistance from the move down. So like if you were going to draw a fib from the up move from the down move, like around this area right here, you're going to run into some serious resistance. And it's really going to start around here. Because 50% you normally get a bounce, and it's crazy. If you look at the market, what happens is, so you could I could draw it. So the price goes from here, and then it does this, and then it bounces off the retracement for this, and then it bounces off this, and then it retraces all the way down here, and then it goes up like this. And then this is where you don't know what's going to happen next. But screenshot this, and then call me in like 4 months. And see how similar. Well, this is a monthly chart, so that's a probably bad example. In a year, look at the chart, and it looks very similar to this, I guess. It's unbelievable how predictable the price is on long time frames. But long time frames take too long to. I mean, each one of these bars is 1 month. It takes forever for it to play out, and people aren't patient, But long time frames really tell you where the market's going. So I'm thinking up. All right, let's see. XLNX. I hope I'm not taking too long on these. I'm just happy that there are people here to talk about the charts. Last week was pretty barren. Okay, let's see here. All right, obviously this chart is going up. It's not really much to say about that. Semiconductor sector, I think, is primed for a run because they got beat up really, really bad in the downward move. But I mean, tech leads the sectors. NASDAQ is 60% tech. So I'd be a little weary of any up move right now for the long term, but the short term play is easy on this one. So this is the last swing low to swing high area that I would look at. And then on a weekly level, polarity is also up. You see how, look how price acts. So this low here coincides with, which is pretty close support, coincides with the 78. So this would be the zone that typically, and I use Fibonacci's just for a price ruler. It just tells you, it's the easiest way to figure out where 50 to 60 to 80% of a retracement is. It's nothing more than that. I think people they overcomplicate Fibonacci, like the 61.8, and they think it's voodoo and all that stuff. It's just measuring price. Price went up 100 points. You want to know when it's on sale. Typically, price is on sale with 50 to 80%. It's that simple. So this is the area where, typically it turns and there's buyers. Doesn't mean it's going there. Polarity is up. Support's here. Daily time frame. Polarity is still up, and the trend line is still intact. So I don't like buying at the top of the zone. Not to call it no disrespect, but this is where dumb money buys, because it's really extended. I don't use indicators, but if you were to use a RSI or something, I bet it's getting close to oversold. I'm just gonna guess. Overbought, and there you go. So it's been hovering and overbought. Look at this. So imagine buying here. You could take the trade, and you probably, it's possible you could win the trade, but you're gambling. It's moved this far up. It's way overbought, and the trend line is intact, still going upside. But look at the steepness of the line and the relevance of where price is compared to the line. It's getting close to touching it. It's just a low probability buy here. Now, me personally, I like to sell the leg down too. So I sell the leg down and then buy it back up. I'm a swing trader. But a lot of people don't have the risk appetite for, selling down tops. And it's hard to call tops because the people that were right here thought they called the top. You got some red candles here. You think it's going down, and then, fooled you. And then you think it's going down, and then fooled you. So that's a very common thing at the top. It's really, really difficult to call tops. You have to be very patient. A lot easier to call bottoms, because typically bottoms, the market falls faster and capitulation happens quicker. and the bottom reaction is always a little bit more aggressive. Like, look at this right here. You know, when it decided to turn, it turned, and you'll see that more a lot at bottoms right here. Capitulation, failure, turn. You know, but tops trick you. Top, top, top. You know, so it's just harder to call tops historically. So if you don't have the stomach for it, then I would probably leave that alone. But I wouldn't trade it buying up here. It's just a low probability trade, and it may go up another 10, 20 bucks, and then you're like, you know, I should have bought it. But you know, that's a low probability trade. So if you make a career out of taking those kind of trades, guaranteed over time you're going to lose, and it's just not a good way to go. So best play here if you don't have the stomach for when it does break polarity and start to go down, and you don't have the stomach to sell it, you might have to wait a while to buy it because it's gone pretty far away from its support area. All right, so that's my thoughts on that. Let's see. And I'm sorry about the Alabama comment. So Florida State, I don't know if that's any better, but we'll stay away from that today. Let's see. Oops. Maybe USD is the first one in the pair. Which currency is that, Jacqueline? Which currency is that? Yeah, Robert, I buy dips. I trade all of my, I track all my trade types. So there's like 10 different trade types. I think 4 of them are counter trends, 6 of them are with the trend. And, you know, selling the rallies, buying the dips, it's pretty common stuff. It's where you enter, which areas are kind of like naked buys and sells. And then some areas you want to wait for some confirmation. So it's just the strategy on how you do it. But definitely buy dips and sell rallies. But what's interesting about the market right now, I'll show you my chart in a second. I want to do this in order. And I was kind of waiting for her to give me a response because I don't know, Jacqueline, which currency that is. Hey, Matt, I see you in there. ZWL. Maybe I just don't have the chart. Ah, it's a coin. Okay. It doesn't look like I have access. My Coinigi account, which I canceled, I'd probably be able to pull it up. It doesn't look like I'll be able to pull up that chart. But you know what I'll do? Let's take a look let's go to Coin Market Cap and see if I can get it there. Might be able to find. Computer's moving a little slow. Bear with me. Yeah, I don't know which one it is. And Jacqueline, you're not responding. If you have a place where I can go to pull up the chart you want to see, just let me know, and I'll go try and take a look at it. All right. And Anthony, no, I don't trade options, because my model is such that my position size is based on my stop loss, and when you buy contracts, there's a deterioration in the contract value, and it just plays with my risk management. So the upside is good and everything, but it messes around with my risk management. So I'm very objective and pragmatic on setting my stop losses and profit targets. So I don't like that being messed with, and options plays funny with my risk management. So I just kind of stay away from it. Ideally I'd like to trade futures too, because I think my strategy and the way that I trade and my ability to read charts, I think I'd have an easier time with options and futures. But I just don't know the markets well enough, and Every time I've tried to kind of get involved with it, it doesn't work with the money management. And maybe I'm just like an old dog that can't learn new tricks because I traded currencies for so long, and my tools that I developed to help myself adjust my position sizes and everything like that. I kind of like sticking to what I know. So I just kind of leave them alone. But there's stuff that I'm doing. Like I had to adapt my trading strategy to the stock market specifically. Stocks are very different than currencies. You know, the catalysts are different. The correlations are different. The 24 hours versus, you know, the quick 8 or 9 hours, which changes things. You know, how fast in the end of the day, beginning of the day, you don't really get the same thing. It's more of different countries' openings. It's just the dynamics are completely different. Now, all charts are just, you know, physical representation of human emotion, you know, displayed on your screen. But, you know, so the charting patterns and all that stuff work across all indexes. But, you know, the nuances of each individual market, you've got to kind of figure them out. So as we go along, I'm going to get better in the stock market too. You know, I just adapted it to the stock market last year because I was out of trading for a while. So, you know, I just had to adapt it to stocks this last year, and I've been tracking my results, and, you know, I'm running a vanilla version of my trading plan right now. So it'll get more elaborate as we go, maybe another year or so, as I get more data. So, oh yeah, I said I was going to show you my results. Let me see. Let me make sure I got everything. Oh, my Valentine is in the chat room here telling me hello. Hello. I'm in another country, but hi. Let's see. Ford. Okay, I'll look at Ford. What's a good stock to oh, wait a minute. I got to get Matt's first. FET. Energy stocks are pretty hot right now. Let me get this thing out the way. All right. Polarity is down on a monthly level. We're in a retracement. And let's measure the move. I don't want to give you less than stellar service here. All right. So let's measure the move. This is the last leg down. Remember, I like to play it leg to leg. I'm a swing trader. Polarity changed to up on a weekly chart. So what I see here, I'm not going to draw all the lines. Oh, actually, that happened here. So what I see right now is I see monthly resistance up here. I see the polarity is up. I see weekly support for the current up move here. So if I was trading this on a daily chart, I'd be a buyer in this zone, where I'd look for a trigger to buy in this zone for the upward move to continue. And here's your resistance area. So that's where I'm at on this. That's where I would be on this chart. Now I'm saying this without knowing any fundamental information about the company. So, you know, news events trump any one trade. That's the bad thing about being a swing trader. If you're trading like long term and you're investing, you know, the ups and downs of the daily market, you know, the gyrations that it does up and down don't really matter. But when you're in a swing trade and your stop is very specific, like underneath these lows, a really bad news event or earnings report or whatever can come down and take you out, and it'll continue back in the right direction. So depending on your time horizon, always pay attention to the news, but it's definitely put in some support. I mean, if you look at this floor here, it failed 4 times in this area right here, this general area, and then it broke way out. So there's some support down here because in theory, if the polarity is up, the move up is going to be larger than the move down, which means the further down it goes, the closer it is to turning around and going the other way. But also, the further down it goes, the higher the probability that it won't make a new high and do a continuation, which is, you know, the price that says you're wrong. So, like, for example, if you were to buy down here and let's say it stopped at this second blue line, and so if you bought down there on the way back up, you might find some resistance right here where this green line is, because the further down it went, the higher the probability that it's not going to go up and make a new high, which means the sellers will be here waiting for you. So the trick a lot of the times, I'm not going to give you all my secrets, but you guys are here, so the trick most of the time for me is to buy it down here and then get out here before I find out that I'm wrong. And a lot of people will say, well, you didn't let your profits run. Well, there's a rule to it. This is going to put a new trend line in, and if this price breaks that and there's a polarity change, there will be an opportunity to buy it again. You know, you don't have to ride the run from the beginning to the end. You can buy it 4 times on the way up. You know, so and I could show you some examples because I've been tracking it this week. I had so many trades where I was wrong about the direction, but I still won the trade. Like, I could show you a trade I took on Starbucks yesterday that I won the trade, or the day before yesterday, and you would call me a liar if I told you I made money on that trade yesterday. But if you zoom in on the hourly chart, it was there clear as day, and I did make money on the trade. You know, so it's just, but it's knowing where to get out, and it's not, you can let the profits run. And what I'm doing right now, I keep saying I'm gonna show you my chart, but I'll explain that in a second when I show you my chart. All right, so let's get through this. So FET. Yes, we looked at that. That's this one. So yeah, FET. And I mean, if you're a day trader, how you would trade this during the day is like, let's say you're on an hourly chart. I never traded less than a 15-minute chart. That's me personally. Even when I day trade, I couldn't trade less than a 15-minute chart because there's just so much noise. And I think people do not understand how much information you have to trade that chart. There's just so many different directions happening at the same time. So, you know, and people that typically trade a 5 or 1 minute chart aren't looking at a monthly or weekly chart, and you're buying and selling in support and resistance areas that are really, really important, you know. And I don't know, I just think it's better to do top-down analysis. And if you drop down to that low of a time frame, you really, really, really need to know what you're doing. I can trade it. I can trade it now, and I could trade it probably pretty successfully, but it's just a lot of trades. It's a lot of math. It's a lot of stuff you have to know that's going on. And I think people just, you know, play momentum on that range. But anyway, if I was going to trade this daily, I mean, the polarity on this chart is down from this, you know, from the move here. The first trade opportunity to the upside, to the downside was right here. So we missed that one. And if you got a strong pullback, you could think about selling it here because you're so far away from support. And it just depends on what your triggers are to get in are. So you may have another opportunity to sell it again. But the direction is up on the chart, and we're in a retracement on FET. So for me, I wouldn't even really look at it until we got down here and then see what it did down there to pick my options on what I would do for a buy. And I'd want to be out way before here. I would do no buying up here. So I'd buy here. I'd be in the trade in maybe if it broke a trend line on a retracement, I'd be on again for another leg, and maybe I could get 2 trades on this, and then I'd sit on the sidelines until it got up here. If it ever got up there. That's never a guarantee either. So, all right. So let's see. Ford. You know, I'm kind of fundamentally against Ford because I took a trade last year that lasted, I don't know, a month and a half with Ford. And it was a regular swing trade. It took forever. And when I finally closed the trade, like a week later, it finally panned out. I was so upset with Ford. All right, so, you know, I'm actually writing a book. And this was an example that I put in the book. So let me go to the chart I actually trade off of, because that was a screenshot for the book. All right, here we go. Ford. Monthly support was here. You can see we came to monthly support. You see the reaction that we received. The first trade opportunity was the retracement right here on the sell side. I did not take this trade because I think they had earnings at the time, or it was really close to earnings, so I couldn't take the trade. So I didn't. I stayed on the sidelines. I would be a little concerned this bottom has not been taken out. It's been tested 3 separate times here. Current market polarity is to the downside still, and we are bouncing off monthly support, and this is weekly support too. They mirror each other, so we had a nice turn in Ford. So, I mean, right now, for me, it's untradeable at this point because I don't know what it's doing. It's at support, and this is the very first support that was put in after it hit the monthly area. So this is where the common sense part comes in, right? So the charts mean something, but remember the charts mean something in real life. All right, so we have support, resistance here. Sorry, we have resistance here, Price came down, made a low. Here's where the resistance is, where the buyer or the sellers are supposed to re-enter the market. Price came to that area. You got the reaction that you're looking for. It went down, made a low. That's all perfectly fine. First retracement is a tradable thing. First retracement after the move down, assuming that it breaks polarity, is a tradable event. All right, so you could sell this pretty successfully 60-65% of the time. You can sell that first retracement, and you're going to at least get back to the 61% move of the up move, if that makes any sense. All right, really high probability trade. I just gave you a free trade right there. All right, that works on all time frames. So, but with this one, the troubling thing is once it hit the retracement area and came back down, which you eventually got without breaking the high, it still failed at that level again. And, you know, it's just kind of meandering around here. So this makes you feel less confident about this high holding up as resistance. And the support area isn't breaking either, which leaves you basically with a zone, you know, trading in a zone. You're bouncing around in a zone. And this is on a daily chart. So this is the same thing Ford did to me when I got into the trade. For whatever reason, people don't get really good conviction about this stock. So right now, it's pretty untradeable for me personally. You could day trade it. And if you were going to day trade it, let me see, polarity's down, but you just had your first retracement to the 61 right here. All right, so your move in an intraday chart, here's your retracement. So price came down, you pulled back up. Remember I told you 60 to 80%, there's where it turned. The further up it goes, the higher probability that it's not going to make a new low. It's not making a new low. You got the blue candle. Maybe it's going to go up. Maybe it's going to continue down tomorrow. I have no idea what this thing's going to do. If you look at it on the daily chart, you know, that looks significantly different than the one. Oh, okay. It's this one. Hold on. Yeah. So here's the retracement that we just got. So polarity's down. If your time horizon is, you know, weeks, you know, or a bunch of days, or, you know, 2 weeks or something like that, I mean, you know, you could sell it, but the risk reward is kind of low right here. Like, so I always assume that I'm wrong. On every trade I take, I assume that I'm wrong. So if I'm wrong about the trade, this is the zone right here where the buyers, would enter the market. So let's say you sold it right here because you think it's going to continue to go down. It's bouncing off a monthly level. And let's say you put your stop loss back here. So your stop loss is back here at 66 cents ish, 67, 70 cents. I don't know, wherever you want to put it, somewhere back here. That blue line is only 38 cents away. Your risk reward ratio is way, way, way out of whack. Just to get to 1-to-1, it'd have to come down here, which is, you know, past the 78.6 retracement. Highly unlikely that you'll get that. Not unlikely, but because it is a downward direction. So the polarity's down. I misspoke. Not highly unlikely, but you're gambling, you know, because the 61 is a pretty good shot. But to get to the 76, the market turns at the 61 way more often than it does coming all the way down here. And remember, if it comes all the way down here, the higher probability that it's not going to make a new low, right? So if it makes it this far, you know, it'll turn and you'd be better off selling it again up here or something like that. And then you don't want to go into a trade with a 1-to-1 risk reward ratio. Every trade I take has at least a 2-to-1 risk reward ratio on entry. So in this particular scenario, if you were selling it here with a, what did we say, 66 or 70 cent stop loss, you're going to want to get to $1.40. We're not even on the chart. You would need it to be a new low. So this is just a low probability trade. So there's nothing to do with Ford, in my opinion, right now, unless you're day trading it. And if you're day trading it, polarity's down. So, I mean, you have a little bit of room. The last move on a day trade would be this right here. I know it's already hit the 61. So I wouldn't do anything with Ford. You could try and buy it, but then you're buying in a down polarity market, which is, you know, kind of rolling the dice too. So I would stay away from it. But that's just my trading style. There's probably a million people that could give you a million reasons why you should buy it and or sell it. So, but I would stay away from it for now. Let's see. Let's get Ford. Boeing. Yeah, I was looking at Boeing early. Boeing is an example. Every once in a while, you'll get a chart like this. Which one? It was Lucky Charms. General Mills. General Mills did this to me last month or a month and a half, where monthly support or resistance is in place, and it cares absolutely zero about it. Like, this is monthly resistance. Like, if you've been watching these videos, you see how I set my charts up. There's always monthly resistance and weekly resistance and support on the chart. And not one example have we seen where price just blew straight through the resistance. Not one time, because it's very rare. You get a reaction there, most of the time, and you don't know what the reaction is going to be, and you have to have rules of how you enter your trades and all that kind of stuff, but you see a reaction most of the time. Boeing couldn't care less about the monthly resistance here. So when that happens, you definitely have to back out on your chart and take a look at what's going on. And now the picture is very clear. There was a top put in here. The price came down. I sold this red candle right here, retracement, back in December. I sold this one. It was the fastest. Let me see if I can zoom in on the chart. It was the fastest big, because whenever I'm selling off of a weekly resistance area, typically it takes a week or week and a half for the chart, the trade to work out. I sold on this red candle here, and I was out of the trade, 2 days later. Look at the gap down. So it ran to the bottom, but you look at it, it double bottomed. And when you look at the weekly chart, we're looking at a new high. So obviously the polarity's up. This monthly resistance is completely bunk. So it doesn't mean anything at this point. I might as well delete it, really, because next month, at the end of the month, it's going to be support bars down here. So this weekly support is what's in play. Again, you're at all-time, not all-time highs. I don't know if it's all-time high. Let me back out. Okay, yeah, we're at an all-time high. I'm not a momentum player. I like to play safe, so I like to buy when it retraces back down, because the highest probability trade is, as far as it's run up, the first time, and I'm giving y'all some secrets here, but the very first time the market retraces is the most predictable time in trading. The very first time a price retraces and reaches support or resistance level is the most predictable moment in trading for me, that I found studying price action. So the safest play is the first retracement into this area, if you get it. I don't like to buy at the top. You could be right, you could be wrong, just low probability trade. And typically the people that are in the market, they bought down here and they're on the other side of your trade selling it to people. And I'm not going to knock indicators. People think I'm anti-indicator. I'm not. It's just indicators are slow. And what happens is, when this move started, there's a lot of people that identified this zone down here and bought down here. Institutional money, fundamentalist people, people looking at longer time frames. They bought down here, right? So the cycle goes, they get in and they push the price up. All right, then the momentum and traders and swing traders, they see it, they jump in, they push the price further up. The last people in are the people that use a lot of indicators that are processing the bars as they're happening to give you a crossing pattern, or overbought or oversold, or whatever the lagging indicators are. Most of the time, those are the people late to the party that are buying in this zone here. And the other side of your trade is the people that bought down here, profit taking, selling it to you. And that's the smart money in the market. So when it does collapse, the dumb money, as they call it, never sees it coming. And it's a repeatable process over and over and over again. So just don't be a part of that. When you study the charts, the safest play is to have patience. When the market runs, sometimes you missed it. And maybe watch more stocks so you can be earlier in the run. Catch polarity changes earlier. Like if you're trading a daily chart and you want to catch polarity on a chain, like if you want, how am I trying to explain this? So this one candle right here, this long blue candle where the polarity changed, or where the market started to go up, there was a polarity change on a 15-minute chart for that move. So you could drop down to a 15-minute, put a trend line on it, a time to mark, and notice where the trend changed, and you could have bought it down there, and you could have made your money just on this bar. And if you're a long-term person that's going to take the risk to it to run all the way to resistance, you could have held it all the way from there. You can time it. It's just lower time frame charts are way less reliable on timing, way less reliable for long-term moves. So that's why I don't even try and predict those that way. But you could day trade it that way. But stay in predictable zones. This is not predictable. And right now, if you look at my chart, see the trend line that I had in place, price broke it, it retested up, and then it came down today. So this could be the start of the retracement move now. And remember, these red lines don't mean anything anymore. That was monthly resistance, which it cared nothing about. So this support area is the buy. So polarity's up. Daily polarity, I would argue, looks like it's on its way to being down. And if you're not the kind of person that wants to sell the rally, or then maybe wait for the pullback and just have some patience and look for your buy opportunity when it comes back for the retrace. First touch is very powerful on Boeing. All right, hope that helps. All right, let's see. Anybody else? Two-minute, Matt, you are a soldier. If you're trading a 2-minute chart, that's when I was trading a 15-minute chart, the 2-minute, 1 minute, 5 minute, they were all useful for timing on a 15-minute chart. So it's definitely useful information. It's just that here's the problem that I have with it sometimes, right? Like your position size, the one thing that people never talk about is, like, I watch a lot of people online, and they trade momentum strategies. But the problem with momentum strategies sometimes is how fast the market moves, and you get a lot of slippage as your account gets bigger. So ultimately, I want to trade a pretty large account. So I'm kind of setting it up institutionally so that it can grow into a large account. Like, what does it take to trade? If you're going to have a 5-cent stop loss, let's do some math real quick. If you're going to have a 5-cent stop loss, for example, all right, so let's say you have a $1 million account. So you got $1 million, and you're going to risk 1% on your trade. So times 0.01. All right, so you're risking $10,000, and you have a 5-cent stop loss because you're trading on a two-minute chart, and that's a reasonable stop loss, 5 cents, 10 cents, depending on what you're trading, right? So that's, you got a 5-cent stop loss. Let's say you have a 10-cent stop loss to make it a little bit easier. You're buying 100,000 shares. So what happens is you end up with slippage. Like 100,000 shares is going to be 1% at least of any stock that trades less than 75 million shares a day. Most of them. I mean, $75 million in volume. If you're buying 100,000 shares, typically that gets you into the range of almost buying 1% of the daily volume of that stock. So you're going to end up with slippage trading on a small time frame like that. So what ends up happening is when you have a $5,000 account or $10,000 account, you can trade that no problem, and you can outperform me 10 to 1. Like, there's a guy I watch online. I'm not going to plug him on the video, but there's a guy I watch online, and he makes all this money day trading and playing momentum. But the thing about it is, you're going to cap yourself out at like $100,000, and you can't really grow it any higher than that. That's the most amount you can trade at one time, because there's just not enough volume to support you at some point, Whereas if you learn how to swing trade on an Amazon stock, Amazon stock, let's see, it's 5 million shares a day of a 1.6 or $1,600 stock. So I mean, you're talking about well over $5 billion, right? I hope my math is right. So if that's the case, you have a lot of room. It's $8 or $9 billion actually. You have a lot. 1% of the daily volume of $9 billion is $90 million. I mean, you can grow your account as big as you want and execute the exact same trading strategy, no matter how big your account is, when you're trading larger cap stocks. But if you're trading, penny stocks or, small cap, it'll work to an extent, but you're going to start dealing with slippage on your orders, and that affects you. If you have a 5 or 10 cent stop loss and you get 3 cents of slippage, that affects your risk reward ratio, not to go along with the speed of the market and everything like that. So if you're going to day trade, it takes a very unique set of skills to do it. And you need to have a lot of tools, like, whether it's hotkeys or calculators that set your position sizes. You need to be able to move really, really quickly, So It's just easier to swing trade. So let's see. Yeah, the time to mark stuff is really it's cryptic. It's like trying to read hieroglyphics. So I think the best way to do it is to get the core concept. Like the thing that I took away from him the most, because they have all types of different trading timing tools, but the thing that I take away the most is the trend lines. Like for example, draw a trend line here. So if price is coming down, and this is just the common sense approach. If prices, the fact that they're dynamic and that you're redrawing them on all the swing highs and swing lows tells you that the line is adjusting to what the market's telling you right now at this very minute. So yesterday's angle of descent or ascension doesn't matter. The new one matters the most. Like, so right here, this is the intact trend line. When price broke to the other side of it, the very first time price comes back and resets, the very first time, this is probably going to get a reaction here because it would have never broke the trend if there weren't immediately people in the market. Like the market conditions created a situation, and it could be a lot of different things that create the market situation. You could reach support. You could there could be a lot of profit taken. So if you're a seller in the market and you start taking a bunch of profit, you become a buyer. So a lot of the move that we've had since January, I suspect isn't so much people buying stocks. A lot of it was just a bunch of profit taking, people, clearing their positions. And that's what started the run. And then, momentum jumps in after them. And then more people, as it's going up that were short, start covering because they're like, oh, it's going to come all the way back to where I got in. And it's just taking the market up and up and up. And the lack of volatility and the lack of momentum behind the upward move kind of, proves that that's what's going on with our market. It's just people taking profit that push the market up. I don't think there's a lot of buyers. The volume is really, really low. Everybody's on the sideline. This is the most indecisive market right now. But anyway, I'll digress. But for time to mark, the trend lines are the most important thing that have worked for me because they really give you a real-time gauge of what the current right now direction of the market is. If you have polarity going in one way and price breaks on the other side of it, the very first time it retraces back is a very tradable event. Very tradable event. So if you learn to mix that with fractals and, different time frames and being in the right support resistance areas and then you put the right proper money management with it, you can kind of start to build something. And the thing about this setup is it works on all time frames. So, you can take this to a small time frame, 2 minute, 3 minute, it works. It works. It's just you better be really, really quick and you better know what you're doing, and always orientate yourself in the chart that you're trading to make sure that you're not at a major support resistance area from a larger time frame chart, because momentum is trumped by zones, right? So the price can run up as far as it wants to, but when it runs into resistance, it runs into resistance. Unstoppable force, immovable object. Well, the immovable object wins most of the time. Most of the time, you're going to get a reaction there. And when you're day trading, you're so close and so magnified to the price that sometimes you lose your place. That's why I have this system. If you pull up any one of my charts, you see these lines on the charts. And what this does for me is it makes it so that I don't have to zoom out to the monthly chart and the weekly chart. I know that because these lines are here and price is here, the polarity on the weekly is up. So this is the support area. The monthly resistance is here. I can see that without having to ever going out to another chart. So this makes it quick. So every morning when I go through this entire list of stocks and I make my watch list for the day, I can zoom right through them because the charts are already marked up to mark the areas that are important. And here's the Starbucks trade where I made money. This blue candle right here, I sold this and made money yesterday. That's impossible, right? But I'll maybe at the end of the week when we do the review, I'll recap it and how it went. But so yeah, I don't know what I'm talking about. But yeah, time to mark is hard to grasp. The best thing to do is to learn how the trend line works, the supply and demand lines as he calls them, and then just go pull out the charts and do it yourself. Play with the chart, all time frames, all different indices, stocks, gold. You'll be amazed at how deadly accurate those things are. Deadly accurate. And maybe I'll do a video, like a whole video on teaching that one day. and we'll really like practice with it. Okay, I get you. 1 cent spreads. I mean, that's a good way to keep it. And I'm not knocking the way you trade. I did it. I did that trade. I never really did 1 minute or 2 minute charts. I would use them for entries sometimes, but based off of a 15-minute. If you have the chops for it, do it, because the truth of the matter is no one can make more money than a day trader if done successfully, because you can compound money every day. If you enter and exit your positions every day, and you make 1% a day or 2% a day, and if you pull a chart out, I have one to see what the compounding effect is on 20 trading days in a month. There's nothing that can match that. Nothing that can match it. The problem is 99% of people can't do it. So if you're going to do it, just make sure you've got all the right tools and really, really practice at it. It's just really difficult. That's all. All right, let's look at Twitter. Yeah, so Twitter, basically we bounced off monthly support here. It's a broken record, right? There's the support area. It touches it. It's reversing. The polarity on the weekly chart is still down. So the way I would play this, if I was to draw this and like predict what would happen, typically it goes something like this. Because this is weekly support. Now, the market could tank soon. We're at major resistance for the S&P, and there could be some form of capitulation. Like we're at risk of that. If this thing turns down and starts really, 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 really moving down, like in December, where the fundamentals didn't matter, the technicals didn't matter, everybody just wanted out, that can happen again. So I'd be a little bit weary of that, depending on your time horizon. But the way this normally plays out is when you get a bounce off of a monthly level, you come up to the weekly resistance, and normally it goes higher into the resistance. Normally it doesn't stop here because it's bouncing off of a monthly level, more momentum. Normally it'll fail somewhere around here. You'll get some type of reaction. Sometimes it pokes out a little higher, whatever, comes back. But then the support area for this move up normally holds up. And if it's going to continue up, you'll get it right here. So let's look at a weekly chart and see if that seems like the right thing. And maybe that's not the right thing, because we're in a consolidated zone here. So it's quite possible that it's a low probability that it's gonna make a new high, because it's we're stuck in a range. So it's kind of hard to predict. But the green lines that I just drew for you is what I would try and trade if it's set up that way. Obviously, you don't want to preemptively say this is what's going to happen, but I know for certain that the resistance area is here now. We've already kind of sort of bounced off the support area, so I would pretty much look for it to come up here and sell it there, and then I would look for the buy here, because the polarity or the momentum behind monthly moves is typically more powerful in Trump's weekly direction. So if I have to bet on this or this, I bet on this. So up. Current polarity weekly down, monthly up. Bouncing off monthly, which means this should be going up and should break the highs. But very first time it comes here, being that it's weekly resistance, it's a sellable move. So it's how you sell it though. So I sold Twitter here, I think, on this red candle. Yeah, and got out. And then got out on the same candle, same day. It was a one-day trade, I think. So, pretty good. Let's see. That's my thoughts on Twitter. AMD and Micron. All right, let's look at AMD. I haven't looked at AMD's chart in a while. Polarity's up. I think we're in the middle of the zone. Yeah. So, polarity on the weekly chart's up. Oh, wait a minute. Yeah, polarity on a weekly chart is up. If I was looking for any trade, it would be a retracement back to here, provided that it hadn't reached the resistance area. And this is one of those charts, and I think Micron is going to be the exact same way, because I looked at these earlier this week. This is an example of stocks that are in the middle of a trading range. So you know, you could buy down here, you could sell up here, but in the middle, you could day trade it based on momentum. If you want daily polarity, currently daily polarity, I would say, is to the downside. But you are bouncing off of a 61 right here. I'd be careful. Polarity's down on a daily chart. I mean, you probably would want to zoom down to a 4-hour or 1-hour chart to find your entry. Yeah, polarity's down, but it's bouncing off the 61 right here, and it's headed back up. And then the overall direction, polarity is up right now on a bigger time frame because the resistance is here. See, and this is why I don't like trading in the middle of the zone. When it gets down here, I know exactly what I want to do. I have no idea what you do right here, without going down to a 15-minute and a 1-minute chart. So, big picture, I think we're headed to resistance. And longer term, maybe medium term, it's probably headed down. Yeah, I mean, we're retracing. Here's resistance. We just started this big move. We haven't retraced more than 50% yet. I mean, this is 50% right here, and there's the baby bounce off 50%. We just talked about that a second ago. So that's the 50% retracement there. I mean, I can put the fib on there if you want to see it. But, you know, see that 50% retracement there, and then this zone. Hold on. Sorry, I don't have the magnet on. Let's be more precise. So there's your 50% retracement. There's the reaction off of that. Sometimes you'll get a pushback down to support off 50s, and you could be a buyer again. Polarity's up, and then you want to be out of the market before you got here, because this is where you don't know what's going to happen next. But I mean, you don't know what's going to happen any day, but it's relatively predictable that if it comes here, you'll get some type of reaction, and this would be the target. So hope that answers that. Micron is basically the exact same chart, I think, without even looking at it. Yeah, same chart. Here, the weekly, it went sideways more last week in this area, which created a support zone here instead of all the way at the bottom in the start of the move. So I'd be interested in maybe a buy in this area, but big picture, it's on its way up to its resistance area. And I think this is a lot of the reason why the S&P hasn't turned yet, because a lot of stocks are kind of like this in the middle of the zone, and there's not a full commitment to the selling, because these stocks are still bullish. So you got some stocks bullish that are major players in major sectors like semiconductors, and some of the cyclicals are in that area too. So you've got a lot of that happening. So there's just not a lot of momentum behind the sell. If they were all at their resistance areas, then the market would collapse a lot easier. But you know, you got both things going on, which equals indecision in the market. And then a lot of times confused minds say no. So if you don't know what you're going to do, you just sit on the sidelines completely. I think there's a lot of money on the sidelines. All right. So let's see. Weekly head and shoulders pattern. Yeah. I mean, you can, yeah, there's your neckline too, and it's broke above it. So polarity's up, and I'm thinking it's trading up to the resistance area. And I think it's the same thing on, what was the first one you said? Was that AMD we were looking at? Yep, same thing. Neckline here. And, you know, support becomes resistance, right? So you can see that the neckline, you know, neckline broke here, and look where price is kind of doing that. So it's a bullish pattern, but the problem is in the middle of the range, like, okay, that means it's going to go up to here, but it doesn't mean it's going to go straight up to here. So when you're in the middle of the range, what you get sometimes is this retracement comes all the way back here and tests this area and then continues up. Timing is the thing. You can probably pretty accurately say that it's more probable that it's going to go up here and touch this area before it comes down here and makes a new low. That's probably a high probability, but you don't know the timing of it. And that's why trading in the middle of the range is kind of difficult sometimes, because it seems to just randomly pick a spot, just come down here, spike down. Like, say you bought this and put your stop back here, it might spike down and come this far and then go back up. Timing is the funny thing. Direction is really not that hard. You can be right about the direction 80 to 90% of the time. It's the timing of it is where the problem comes in. So those charts look pretty much the same. Let's see. I think we got them all. Oh, I was going to show you my results and give an example for something. So one of the things that I'm, where am I? Hold on. Results. All right, so here are my current results. I like to be around 60 to 65% win rate. Historically, that's where I perform at. And I'm not there right now because the market's really been kind of funny. Now, what's interesting is while we've been in this resistance area, I've been pretty, I've been about 50 something percent because I think, I wish I would have took a picture of my trading journal so I could have put it up here so you could see all my individual trades. But the swing trades, the buy the dip, sell the rally type trades have not been very profitable this year. The market and people, guys, I want y'all to remember this too. Trading is a zero-sum game. There's always a winner and a loser. Every time you take the trade, there has to be somebody on the other side of your trade willing to take the opposing position, right? So everyone's playing to win. So, you know, it's kind of, it's trickery going on here. Like you want the market to think one thing to get you to do something, and then they do something else. That's how it works. So the market knows people buy the dips and sell the rallies. And at some times of the year, it works perfectly fine because no one person can control the whole market. But, you know, there's times where the market gets a little funny. Like right now, everybody for the last 3 weeks has been saying that the market's at resistance, which is a part of the reason why the market hasn't turned. If everyone knows it, that's not going to work. What you need to do is get the market talking about this bullish run is going to continue, and, you know, where it's, you know, the CNBC will come up with a million reasons why the market's going up, you know, on trade talk or this or that or this reporting or earnings or, you know, whatever. They find a reason news-wise for technical that really are basically technical reasons, but they're making up a reason why the market's moving. And these are all the setups to get people to buy and think we're out of the woods because, you know, I have lines on my chart because I trade price action and I've been trading the market for 10 years. I have these lines on my chart. Most people don't have these lines on their chart that says, hey, stay away from this or don't buy this. So you're just looking at these candlesticks and you might have some indicators that are pointed up or down. And what happens is, you know, this big move up and this, and you just buy it. A lot of people do it. It's just how it works. And it's the setup. I mean, when you look at the S&P, I mean, you look at this weekly chart, and I mean, this was a gigantic move down that has had no pullback. It's going back up. It's had no pullback. In history, that never happens. Here's your big move down. There's the move up. There's your pullback. Big giant move down, back up. There's your pullback. It's just how it works. You get 15, 20% dips, big push down, pullback, retest. You know, down, there's a retest. You always retest, almost always. I think we're getting close to 08 now. Yeah, we're in 08 now. So 08 did the same thing. Right here was the big move down. There, retest. And actually made new low. And then this, you know, it's how the market moves, mostly. So, you know, and it works both ways, too. It does the same thing going up, you know. So, you know, it's trickery. Look at this zone. There's been no pushback down. At the minimum, at some point, the market, high probability, is going to come back down here and retest the area. And I'm not saying it's going to continue going down. I think it is, personally, because of all the other fundamental factors. But this is going to, this slow movement that we're getting and all the talk of people forgetting about all this pain we felt in December, no one remembers it right now. They talk about it, but they don't remember it. We're in the middle of buying. A lot of people trapped and sucked in here. You need that, you know, for the move down. So just be careful. But most people don't identify these zones, and they buy right into it. This is a 78% retracement. The last time the market made a strong move like this is a 78% retracement. It stopped right on a dime. There's a 78. stopped right on a dime, turned and went. Same thing I said earlier. Higher up it goes, lower probability that's going to make a new low. So what it did here is it went down, and then the 78% retracement of the up move, the move that went up, that was the original retracement, turned out to be the floor for it to go to a higher high. That's how the market works. There's almost always a retracement. It just, especially with a move this large. So we've had no retracement. There's no way I would buy this right here. Now, I may have to wait until it comes all the way up here before we get the turn, because it's got to suck enough buyers in to pull the rug out from underneath you. I'm not going to be one of those suckers, so I'll just have to wait it out, and it'll be a slow month. But back to my results. Let me make sure you guys aren't asking me a question. Okay. Yeah, so as far as my results go, there's a lot of, this is why it's important to track your results. Super important. Because I just modified my trading strategy to work with the stock market. So right now, my exits on my trades are flat 2-to-1 risk reward ratio trades, and I don't let the profits run. I'm doing basically a mathematical equation right now. My average winner right now is 1.8 times larger than my losers. So so far this month I have 24, or this year I have 24 winners and 18 losers. That's 57%. Now that's below where I want to be. I have 4 open positions right now. All right. So, but let's do a little bit of math. If this is a profitable strategy, if let's say I'm risking 1% per trade, I've lost 18 trades, so that's 18% loss for the year, right? But I've won 24 trades, and they're 1.8 times bigger than my losers. So that's 43.2%. So you subtract the 18% from that, and what you get is I'm up 25.2% for the year at a 1% risk profile. Okay? So this is a profitable strategy. But what's important is to track the individual performance of each individual type of trade, and then pick out the ones, like all my with the trend trades. I'm going to go back now. I have a trade journal that has every single individual trade written down. I'm old school. I do it in a notebook that I carry around with me as opposed to making a spreadsheet, right? Because it's just easier for me. But what that's going to enable me to do is to go back and look at every single trend trade that I took and every single counter trend trade individually, and track the results of how many of them should I have let run, and how many of them should I took half my profit at my target and then let them run to the next target. And I'm gonna go back and do that, and track it for the whole year, and then come up with the percentages of this trade had a 20% run rate. 20% of the time you should have let it run. This one might have had a 50%, and I'm gonna find which trade setup best is the type of trade to let run with the highest probability. You need data. For everything you do, you need data. So if you're trading out there, I hope you're keeping some statistical data. It's important. Like this first trend line in the book that I'm writing, I'm going to give away whatever my top 2 or 3 most profitable trade setups are. I'm going to put them in my book, and I'm going to give it away with the book, right? So I'm tracking the results right now, and I know what historically the best trades are. It's these two, 5 and 7, but the stock market's a little bit different. It's more easily manipulated. I think foreign exchange and currency is more herd mentality, because it's trading so much volume. It's hard for any one person to shift it too much. Stocks can go to low volume, and one big player can move the market left and right. And I think it's much more manipulated. It's not an over-the-counter traded asset either. It's traded on an exchange. So it's a lot easier to manipulate. So my data from currencies, other than my core trading strategy, I'm not bringing it all over. I need more data. So my trading setup or my system or performance this year is going to pale in comparison to next year, because I need more data. But I'm not just going to start letting everything run. I'm going to track it and let the system tell me what is the best thing to let run and which trades work out best. So you need to track data. It's a really smart way to do things, so that you can adjust stuff on the fly. All right. So I think we'll end there. No one has any other charts to look at. We went pretty long tonight, hour and a half almost, hour and 20 minutes. So anybody, anything? Okay, well, I thank everybody that joined us tonight. This was a very, very productive live session. It's the best one we've had so far. I don't know as far as how many people were on the channel or whatever, but as far as interaction and having a bunch of charts to look at and all that stuff, this was a lot of fun. And as you can see, I'll talk about the market all day. It's hard to get me to shut up. Ask my wife. So we're gonna end it right there. We'll do it again next week. I'll do a end of the week market wrap probably on Saturday to see what happened with the market. The market's closed on Monday, so I expect funny things to happen in the market tomorrow. I have no idea what's going to happen, but I don't expect good things. So I hope you guys have a good rest of your evening. Any charts or anything that you want to look at during the course of the week, write them down, and then join me next week when we go live and tell me what they are, and we'll break them down. All right. Hope you have a wonderful night, and I will talk to you soon.